Bitcoin is money, and nothing else can compete with Bitcoin. And anything trying to compete with Bitcoin is a scam. And that's what makes you a Bitcoin maxi. However, you have to realize and recognize that there are going to be centralized and decentralized solutions that get built up around Bitcoin that help evolve it from digital gold to pristine collateral, because that's the next shift we're moving into. And that's kind of my new orange pill that I've had in the recent years since founding People's Reserve. We started out as that magic internet money back in the times when you and I were learning about it and first getting in. And then it became a serious thing. It became digital gold. And right now, I think the world is kind of recognizing that it is digital gold. And that's why the next stop, once we solidify this 6-digit mental hurdle that we have to get through, the next stop is going to be gold parity.
Hey guys, welcome back to the channel. Today I'm here with founder of a startup called People Reserve, CJ Kostantinos. How are you doing, man?
Hello, hello. Thanks for having me. Great to be here.
Hey, I know you've been in crypto, actually in Bitcoin, for over a decade. So how have you gone into it? What was your journey into Bitcoin?
Oh, man. Well, it started out like most people's experience, which is you see the volatility and you're like, ooh, I'm going to hit the buy and sell button a couple times per day and I'm going to be a multimillionaire because I'm a genius trader. And then you learn that you're not a genius trader, and all the things that you thought you saw in the charts, you might as well be reading some hieroglyphics because it don't work that way. And I still continued to accumulate and to kind of lick my wounds. And thankfully, I had a great mentor. His name was Jeff Berwick, calls himself the Dollar Vigilante. And he was able to hold my hand and walk me through that first orange pill phase where, I think I'm going to get rich quick. And then once I got through that, I started understanding, the difference between money versus currency, money with its characteristics and currency with its characteristics, and how those are two separate tools for us to use within the economy. And from that point, I got really interested because I saw Bitcoin as a commodity, and that got me into mining. And then after I got into mining, now I finally started to learn about what proof of work is, how the network actually interoperates, and how nodes trust nobody so that we can trust everybody. And I highly recommend, even to this day, like, people should get into mining. You're not going to make money, but just get a hobby miner, find out how the network works. And it reveals a lot of information. It strengthens your thesis, which then strengthens your conviction, which then really leads to your portfolio performing better because you have a better understanding of what you own. And the more you understand what you own, the more confident you're going to be. And that's what happened to me through my journey and through my process. With each new orange pill, I understood a little bit more. And right now I'm at the process where I'm like, nobody can ever be a Bitcoin expert because it's so vast. Like all the tentacles of Bitcoin, they reach into every vertical of life. And actually, I saw Bill Gates come out recently and say the use case for Bitcoin, cryptocurrency is nothing. It's garbage. And it couldn't be further from the truth, because the use case for money is the largest total addressable market in the world. So it has the largest use case that there could possibly be. And he's just being disingenuous about that. But you'll learn that as you go through your journey, like you and I have over the years, to finally you get to the point where you say, hey, you know what? Bitcoin is money, and nothing else can compete with Bitcoin. And anything trying to compete with Bitcoin is a scam. And that's what makes you a Bitcoin maxi. However, you have to realize and recognize that there are going to be centralized and decentralized solutions that get built up around Bitcoin that help evolve it from digital gold to pristine collateral, because that's the next shift we're moving into. And that's kind of my new orange pill that I've had in the recent years since founding People's Reserve. We started out as that magic internet money back in the times when you and I were learning about it and first getting in. And then it became a serious thing. It became digital gold. And right now, I think the world is kind of recognizing that it is digital gold. And that's why the next stop, once we solidify this 6-digit mental hurdle that we have to get through, the next stop is going to be gold parity, that $15 to $20 trillion market cap. And then we'll stop and take a break there for sure. But for those who watch this show and who are doing a little bit of deeper digging, you're going to be one full cycle ahead of everybody else, because what you're going to understand is it's not just digital gold. Actually, because of these centralized and decentralized solutions that create a decentralized finance internet economy, Bitcoin is actually pristine collateral. And the internet economy is the only economy in the world with no debt. It's the only economy in the world that no one country can control or outcompete, because it's an aggregate economy of everybody. Most importantly, it's the only economy in the world with a free market yield curve on its reserve asset, which is Bitcoin. And that's really what this is about. This is about moving into true free market money, free market interest rates, and making finance make sense again, because we're so deep into the fiat experiment that the incentives have been flipped upside down. And that's kind of where I am on my journey now. And I hope everybody is able to get there and see what's coming, because if you can understand that and you can see how fast things are moving here in the United States with a strategic Bitcoin reserve, the American Sovereign Wealth Fund, 15 states now have strategic Bitcoin reserve legislation. It's not just going to be the states, it's going to go down to the cities and municipalities. The entire world is going to shift into Bitcoin, not even because they want to, but because they have to. And once you understand that game theory, you can position yourself now to front run governments, states, corporations, small and medium-sized businesses. And if you do that, you will set yourself up for success over the coming years. You will set yourself up to see the amount of purchasing power that you have in your savings increase at a rate and pace that could never happen in any other marketplace in the world. And that's what's so exciting about what's going on with Bitcoin right now and where we're going in the very near future.
So much goodness here to unpack. Let me start by asking you this. Is Trump priced in?
No, absolutely not. And you know what? Trump is not dumb, and neither is Elon. So it's amazing to me. You know, the United States, we print this money, we spend it into the economy. It's supposed to create growth. But if you look at our debt to GDP ratio, it's not creating the growth faster than the rate at which we have to take out the debt to spend it into the economy. It's not working. We need something that we can take that money and put it into in order to generate principal plus interest. For every dollar we borrow right now, we owe back about $1.04, but we're not even producing $1 worth of return. We're not even getting our principal back to us. So that creates a problem. Dilution, inflation. And that's why everything's been so bad, especially since 2020, because we've shut down things inorganically and we had to print it over. And now that printing is going into the system, putting that upward pressure on prices because of the dilution of the purchasing power. And we have to protect ourselves. And Trump is coming in with Elon and Doge and saying, hey, you know what? It's not just about the asset side of the balance sheet. It's not just about the strategic Bitcoin reserve. It's also about reducing the liabilities. So I'll hop into that in a second. But I think this is an important thing about Trump. He doesn't like to be told what to do. Okay. All the Bitcoiners went to him, gave him millions of dollars. He won. He's coming through on his promises. And they said, hey, we got to create a Bitcoin strategic reserve. And he said, oh, that's a good idea, but I'm not going to be told what to do. I'm going to call it a strategic Bitcoin stockpile. Right. And then they're like, well, hey, we got to get this bill passed through Congress so that we can legally have a strategic Bitcoin reserve and the country starts accumulating Bitcoin. And he goes, yeah, you know, that's a great idea. But you know what? I'm just going to go ahead and create the American Sovereign Wealth Fund. So he's listening and he's learning, which is the most important thing. But he's not going to be told what to do. He's going to go about doing it his own way. And that's what makes Donald Trump. That's what makes him a leader. He'll listen and learn, but he's going to accomplish the goals in his own way. So the marketplace, I think, is misreading that, because the type of politician that we're used to is just like promising things over and over again. A lot of those promises fall through, and then it's just a bunch of bullshit of why something didn't work out instead of actually getting the job done. But Trump being a businessman, Elon being a businessman, they come in to get things done. They don't have enough time in the day to pretend to get things done. Things need to get done, and they need to face the problems right up. And look at in the United States, the Democrats are in panic mode, and even the corrupt Republicans, because it's on both sides. They're absolutely scared out of their minds right now, literally coming out and saying that Elon and Doge are taking over the United States Treasury. No, they're not. They're simply doing an audit. They're simply coming in saying, where'd the hell all this money go? We don't want to learn about how the Pentagon doesn't know where billions of dollars is. We don't want to learn how USAID is giving billions of dollars to fund transgender and all this other stuff in other countries when we have Americans, especially veterans, sitting on the street homeless. We want to figure out where this money went and how it got there and who's the real beneficiary of this money. Who would complain about that? Nobody would complain about that unless they had something to hide. And what's so important about that movement is that it lessens the liability side growth of our balance sheet. It's the fact that the U.S. liabilities are outpacing in growth the asset side of our balance sheet. That's why debt to GDP ratio is becoming more and more unhealthy. So if at the same time Trump can create the American Sovereign Wealth Fund, we might be able to get the SBR bill passed through Congress, and we can put Bitcoin on the asset side of our balance sheet. We can finally get a return on an asset greater than the $1.04 that we owe back for borrowing the dollar. Can't put it in real estate because it's going to create more of an affordability crisis. Can't put it in raw minerals because it'll take a decade to bring them to market and start the profit. Bitcoin is the number one thing you can put it into to make the asset side of your balance sheet go up. Look at El Salvador, best performing bonds in the world. Why? Because their credit worthiness is going up. That's what we need here in the United States. But we also need Doge. So we're buffering the asset side of the balance sheet, and we're fixing the liability side of the balance sheet. This is exactly what we want to see in the United States of America. And ultimately what that means is that that's good for Bitcoin, because we're going to get a perpetual price agnostic bid from the American Sovereign Wealth Fund, potentially from the Strategic Bitcoin Reserve, definitely from the state's strategic Bitcoin reserves and cities and municipalities. The way they have this set up is that they're going to take a certain percentage of tax income and put it directly into Bitcoin. So they're not a hedge fund. They're not going to try to time the market and read the charts. They're just going to take a portion of tax and they're going to buy Bitcoin regardless what the price is. That's how it works on the government level. It really is that inefficient. And if you need proof of that, look what Germany did. They fat sold $50,000 of at $50,000 all in one chunk with a massive amount of slippage. It was like amateur hour. So the government doesn't know how to do these things. They're just going to take a portion of taxes and put it in. What that means is the base layer of demand for Bitcoin is about to grow exponentially. The base layer of demand for Bitcoin that doesn't care about the price and is just going to continue to put a perpetual bid on the asset is going to accelerate tremendously. And it's all happening because of Trump, because of his leadership, and because of his willingness to listen and learn. I don't think he has the whole picture. I still think he has some stuff to learn. We need to get smart Bitcoiners in there by his side, whispering in his ear to plant the right seeds so that those seeds can grow and bring forth the fruit that we're all hoping to enjoy. He's willing to listen. He's willing to learn. And we haven't seen that from a politician in a very long time. So no, Trump is not priced in. Elon is not priced in. And the goal of the administration to turn the United States of America into the Bitcoin and crypto capital world is not priced in. We're like 15 days in and people are already complaining because this is a microwave generation. We are going to see some big changes. Money markets are going to be rattled and the foundations of finance are going to be shaken with the changes that are being made. And it all starts with this administration and the promises that they made to the people who voted for them. And I couldn't be more excited. For the first time in a long time, for the first time ever for me, I actually have hope that we can avoid a hyperinflationary depression. And inflation is going to persist. It needs to. There's no way that we can cut that amount of spending, but we can slow down the rate of inflation. We can build the asset side of our balance sheet, and we can recapitalize the republic and reestablish hope in a better future for ourselves and for our children.
How likely do you think these stockpile or whatever we want to call it will have crypto in it? Because it seems like there's a lot of speculation at the moment about Solana, XRP, or whatever. Do you think they will actually use crypto as a strategic reserve as well as Bitcoin?
I don't think they will, and I don't think they should. And I think that's what this process now that they're going through is learning about. It's about taking a deeper dive and slowing things down. For those of you out there who have built a business, you know how this works. The game gets slowed down tremendously. And what could take 1 hour ends up taking 1 week. Well, that's what we're seeing happen on a national level. What should really take about 1 week of a private conference with 2-a-days is really going to take, 90 days, because that's the process of when you get government involved, it makes things more inefficient. But through that process, I think they're going to learn that Bitcoin is unique and it stands on its own, and it truly is a money. It's an engineered money, and that's what's so amazing about it. And they don't get that yet. Most of the market is looking at Bitcoin as a risk on tech stock. Well, Bitcoin couldn't be further from it. It is an engineered money. We had the gold as a natural money, and we always move from the natural to the engineered. And at some point in that line, the engineered is better than the natural. We went from a candle to a light bulb, from the horse to the horsepower in the engine, from writing to the computer, and then from gold to paper derivatives. No, okay, gold was better. From gold to circulating credit. No, gold was better. Well, from gold to Bitcoin. Now we have the best of both worlds. Now we have an asset that makes gold even better because it takes its scarcity, its limited supply, and it makes it absolute digital scarcity with a 21 million limit, and that's it. And then it takes from the paper derivatives, these debt derivative fiat currencies, the quick, easy, cheap time to settle. So, the problem with the paper is you can create an infinite amount of it. Well, you can't create an infinite amount of Bitcoin. There's absolute digital scarcity. But what makes the paper so efficient is that you can settle it really quick. It's a Web 2 ledger between banks, and it's just the click of a button. Well, Bitcoin, you get the best of both worlds. You get the hardness and you get the easy, cheap, secure settlement. And that's what makes it an engineered money, something that was strategically designed to leverage the natural laws of economics and commodity cycles and price discovery to empower its users, its savings technology to empower we the people. It's absolutely amazing that I think it's the first discovery of real money, and we're alive during the emergence of this real money in 15 years, now moving from the magic internet money, digital gold, reserve asset of the internet economy, and most pristine form of collateral in the world in 15 years. You know how long it took to get rid of beach shells and yap stones? A very long time. The pace at which this market is moving is absolutely astonishing. The pace of the growth of the base layer demand should be blowing your mind, and you should be doing everything in your power to have as much savings as possible and to put 100% of those savings into Bitcoin, and then let your wants and desires and your investments take away from your Bitcoin savings, because Bitcoin is what's going to have present the opportunity to change your life for you and for future generations. It's unbelievable that we're alive in this time. This has never happened before. It's a new asset class, and the asset class is now being integrated into the system. We're watching complete financialization and monetization of BTC. So stay true to your thesis, keep stacking, and it will pay off.
You've seen a bunch of cycles, and how much do you think this is going to change the 4-year cycle in which Bitcoin has been trapped into it for now? Do you think we will break free from it?
Absolutely. Absolutely. Because I think the cycles that we've been in, a lot of the part of that cycle that the market calls the halving, the catalyst to that cycle, which is true because it does create a supply shock. So the supply demand balance changes. Therefore, the free market price changes. And also during the halving, when the issuance gets cut in half, the cost of production doubles. So the miners who are earning the rewards, they have to ask for a higher price in order to stay profitable. So if you want to access the value proposition of the network, you have to pay what they're asking. If not, the hash rate would shrink because there would be no profitability, and then there would be no reason to invest in hash rate. So the fact that the hash rate is growing up and moving up exponentially is a evidence that the value proposition of Bitcoin is nowhere near where it's going to be in the long term according to its current price, and that profitability will continue to drive hash rate, and it becomes a commodity cycle. So that commodity cycle was dependent upon an emerging asset class, upon a certain understanding of the asset with a certain level of liquidity and a certain group of participants within the marketplace. But now what we're seeing, and I think that this cycle has been a catalyst because we have the BlackRock ETF. So we're now seeing institutions come. Michael Saylor at MicroStrategy is literally issuing debt at 0% with a 55% convertibility rate. That means the amount of demand for that debt is absolutely insane. He's also coming up with new instruments that he's able to offer, like the preferred offering, which was twice subscribed. He wanted 250, they raised over 500 from it. The amount of demand and capital looking to move in is not just retail anymore. It's not just people like you and I who the light bulb has gone off and we're going to put in as much as we can, but our pockets are limited here. We're just like everybody else. We got to trade our time and energy for cash flow. So we're limited on how much we can create with that time and energy. But companies who aggregate time and energy and offer products and services to the wider economy and even the international economy are now coming to the same realization, and they're going to transfer that wealth and that savings from the government debt instruments that they currently hold across the industry, these cash equivalents that create yield, which are basically the treasuries, but they're going to move it into Bitcoin. And if they don't move it all into Bitcoin, they're going to move a percentage into Bitcoin. And it's funny because the same thing happened to Larry, right? BlackRock produced a special report. 84% plus is the optimal allocation in a portfolio. And then Larry comes out and says, yeah, 1 to 2% makes sense. And then maybe like 6 months later, yeah, 3% is making sense. And I just saw him the other day and he's like, yeah, I'm thinking around 5% looks about right. Well, you know what happens to Larry? He has to be a little bit careful because of his customers. But ultimately, in the background, they know it's 84% plus. And then ultimately, it's 100%. Everybody is slow walking into this, dipping their toes in because it's a tech stock. No, it's savings technology. And the sooner that you utilize that savings technology in your portfolio, the better off you're going to be. And the more chances you can take in your life with a new house or a vacation or this and that. It's ultimately about your quality of life and your standard of living, right? We only get to live once. And if you do it right, you're going to have plenty of sats to pass down to your children and to their children. But it's also about living this life and enjoying it and accomplishing what you want and being fulfilled and helping the people that you want to help. And Bitcoin enables it. That's why I say we don't need Greenpeace, like this big green blanket behind me. We need orange peace, because Bitcoin is the true peaceful revolution. It monetizes peace, and if we can embrace it, the whole world, the whole dynamic of how we interact with each other, country to country, city to city, person to person, is going to change, and it's going to change for the better.
How long do you think we need to see before a decent amount of people are going to start considering maybe to invest in Bitcoin as opposed to real estate, for example?
Yeah, I think it's going to take a very long time. I think it's going to take a long time because this is basically indoctrination. I mean, I went to school for accounting and finance, and I didn't learn anything about Austrian economics. I didn't learn anything about circulating credit versus commodity credit. I didn't learn any of the type of moral issues with fractional reserve banking. I didn't learn any of this stuff. Truly, it's like the Matrix. When you take the red pill, that's why we call it the orange pill, right? Because you take the red pill, you pop up and you're like, what the heck is going on? I thought I lived in this world, and instead I'm a battery, and robots want to come kill me. Like that's pretty much what you wake up and you're like, whoa, I am a battery in the form of tax slave. I pay the taxes that produce the cash flow that back the treasury. I'm the battery that powers the engine. And then meanwhile, I get to go watch a football game on the weekends. Wait a second here. This doesn't sound like rewarding. This doesn't sound like I'm getting fulfillment, but you have to wake up from that. And once you break free from that, and that's why some people kind of lose it, because they don't realize how much they've been lied to since birth, how much they've been like a fish into a fish tank. You try to teach a fish in a fish tank that there's a whole ocean out there, but it didn't come from the ocean, right? When Nemo goes into the fish tank and the fish that was born in the fish tank, he's like, I got to get back home. He's like, what are you talking about? Where else can you live? How'd you get here? Where'd you come from? I don't understand. What do you mean there's a whole ocean out there? That's what Bitcoin does. It wakes you up to this whole ocean of the decentralized finance internet economy, free market interest rates, engineered money, where it makes sense to save your money, because the compounding annual growth rate of your savings vehicle produces enough purchasing power that you can start that business, that you can make that investment, and you don't need to take crazy risks. So it really is red versus blue or black versus white. It's one thing from another. And that's a rough wake up. Not everybody makes that transition the way you and I have. Some people go back into the cave. Some people are like the guy in the Matrix, like, send me back in and make me rich, and I'll sell out these people. I don't care about these people. This is more important to me. So unfortunately, there's nothing we can do for those people, and they have the right and the freedom to make that choice for themselves. But it's not going to be something that happens overnight. This is a long, tedious process. And interesting, I think what Trump is doing with the education system plays into this narrative, because we have to get rid of the Department of Education. The Department of Education looks like it's a universal basic income program. All the costs have gone up, the amount of employees have gone up exponentially, but the grades and the performance of the programs have gone down. That's what universal basic income does. You get to pay people, they come in, they clock out for their paycheck. They don't care. They have no dedication. They have no passion. And what happens is you pay a lot of people and you spend a lot of money, but you don't get the results. And that's exactly what we've seen. So as a businessman, he's looking at that and saying, you know what? Scratch it. Get rid of it. It didn't work. Let's give education back to the states, and then let's let the local people in the states make up their mind how they want to teach their children, how they want to set up these curriculums. Because here in Florida, one of my goals in life is to invest in a Bitcoin centric school that teaches all things planting, gardening, health, wealth, negotiations, taxes, finances, self-defense, car maintenance, like all the things that you actually need that you didn't learn in school, plus all the things that you still use in school and need to learn. So if we can revamp the curriculum and get our kids being raised up into topics and discussions that aren't controlled by the deep state to dumb you down, but instead are fostered from a young age to make you think and to be a problem solver, there is no limit to how good this can be and how fast we can change things around. But it really does start with the kids, and it does start with education, because they need to have those seeds planted early on about the difference between money versus currency. They need to understand that fractional reserve banking is dangerous, and that circulating credit is different from commodity credit, and that when you have a business in this inflationary environment, debt is an asset, not a liability. So they're not being taught these things, and then they come up and they get shell shocked because they're like, "Whoa, the truth! They lied to me about everything," and that actually does more harm than it does good. But thankfully, people like you and I were able to fight through that, and our friends and family are able to support us through that transition. And we get to a point where now we can start to allocate the proceeds of our responsible saving to help make better changes. So it really does start with Bitcoiners. It really does start from the bottom up, from that city level to the state level, then to the federal level. But at the same time, we have Trump and his team now working at the federal level because we have successfully campaigned at the lower levels. And that's where this is going. And it's an exciting trend, because if we can shift this trend, I think truly we can change the world, and and that saying Bitcoin fixes this will be proven on a global standard.
Where do you see crypto in the story? Is the enemy? Is a friend of Bitcoin? What's your take?
Yeah, so I think crypto is definitely 99% of crypto is a scam. It's an absolute art meme coin scam, and you should stay as far away from it as possible, especially if it says that it competes with Bitcoin, because nothing can compete with Bitcoin. It's like Bitcoin's like the wheel, and then somebody comes out with another wheel and it says, "Well, we're going to compete with the wheel." There's no need to redesign the wheel. Sure, if you want to make your tire a little bit thicker, a little bit wider, a little bit this, a little bit that, go ahead. But there's no reason to reinvent the wheel. We have the wheel. It's Bitcoin. It's pristine collateral. It's engineered money. We don't need money. If anything competes with it, it's a scam. However, as I was saying before, there are going to be centralized and decentralized solutions that help evolve Bitcoin from the digital gold to the pristine collateral. And this time we have a better way of doing it. I'll tie it back to the gold. We had the gold. Gold was a good, strong, natural money. It needed a layer two so that velocity could increase. There was no way that just trading gold in the grocery store made sense and weighing things out. The money can't change hands fast enough. Bitcoin is kind of in a similar situation. We cannot increase block size to speed up transactions, because then you lose decentralization, and you cannot. That's an unacceptable trade-off. You need the decentralization of the network. So you have to keep the blocks the way they are. What does that mean? We need an L2 solution, just like gold, that will help us increase velocity. Well, do we want to increase velocity with paper Bitcoins, just like they tried to increase velocity of gold with paper gold? No, because the same thing will happen. There'll be a crap ton of paper gold and not enough real gold. And then the government will come out and say, well, now this paper isn't really worth the gold anymore. You can't redeem the paper for the gold because, sorry, can't happen. And then it fails. The L2 fails and breaks away. And in 71, when that happened, we went into the debt derivatives. So it used to be a gold derivative where the derivative could be redeemed for the gold itself. And then it got cut. So then we went to a debt derivative. So the paper could only be redeemed against debt. And from that point forward, inflation skyrocketed and inflation took off, and it broke the system, and it brought us to where we are here today. So if we make that same mistake by using paper Bitcoin, like they use paper gold, I think, you do the same thing and expect different results. That's the definition of insanity. So let's do it different. Well, how can we do it different? Well, we can apply the same blockchain technology that was created specifically for Bitcoin, specifically to solve the double spend problem and make sure that you could have absolute digital scarcity. And we can apply it in a complementary network, in a network that is designed to be an L2 for Bitcoin, and a network that is designed where you can confirm the supply in an open, transparent ledger that the amount of paper gold couldn't be confirmed. So then there were speculative attacks from France and other countries who wanted their gold back, and they had to end it. Well, now if there's a speculative attack on Bitcoin, it's all transparent on the ledger. Everybody has insight. We don't need to trust what the government says. We don't need to trust what they hold in Fort Knox. It's completely auditable and it's out in the public. So it's better to have a public, open, transparent L2 that allows Bitcoin monetary velocity to increase than it is to use paper Bitcoin like they use paper gold. So I think crypto plays that role of being the L2 that allows velocity to increase, but then also at the same time, because we have smart contract capability with these bigger blocks, it allows you to have contractual agreements between each other that settle in Bitcoin. So the networks that understand that Bitcoin is the base layer money, it is the settlement layer of the financial system, they can build on top of that settlement layer different types of products and solutions that ultimately leverage the characteristics of Bitcoin so that people can benefit from those characteristics in different types of solutions to the different problems that the marketplace faces. This is, in my opinion, the right and mature way to look at it. And unfortunately, those legitimate companies and those protocols that could have actually been really useful, those were the ones that were attacked by the war on crypto. And then the worthless coin scams and arts and memes and all this stupid stuff that was just collectibles and worthless. Why did the market go there? Because it wasn't allowed to go to where the real innovation was taking place, because there was a war on that real innovation, because the monopolies and the powers that be didn't want to lose control of their money laundering system. The same people fighting Elon today to hide the results of the audit are the same one who were benefiting from that system and fighting against a new system that would have held them accountable, because we could see where the spending goes. We can see how much inflation you created. We can see the mismatch between assets and liabilities. That is where we're moving into an era of open and transparency, and it's going to be provided by Bitcoin as the money in the entire system, the base layer of settlement, and then through other crypto protocols that help increase velocity, turn it from digital gold to pristine collateral, and then enable different products and services to be built on top of Bitcoin as it's integrated into our financial system.
There is an interesting parallel here with the internet, right? So, and technology in general, I would say. I remember in the early days of our beloved internet, there was a lot of shady business happening, right? It's same as what's happening now. Like you pointed out, I think we have to digest the technology. We have to learn how to use it. So it's not going to be fully efficient from day one. And do you still believe, A, that we will pass gold, and B, what do you think is going to happen to gold once Bitcoin is going to go over it?
I do think Bitcoin's going to pass gold. Absolutely. And I wouldn't be surprised to see it happen this cycle. I think there's a real potential that this cycle, what people are missing is, once these Bitcoin strategic reserve pop up and once the price agnostic perpetual bid starts, the rate and pace of growth in Bitcoin is going to be like we've never seen it before. So this theory of diminishing returns, let me explain why I think diminishing returns are taking place. Because when the price of Bitcoin, when the market price of Bitcoin goes above the cost of production of the miners for Bitcoin, for them to earn the block subsidy, what happens is that creates profit. Well, in the early days, when people like you and I were mining, we didn't really care about profit. We weren't running a business. We were just mining. It was a hobby. It was it wasn't an actual publicly traded business venture. It was just like, hey, this is cool. Let's learn more. Let's play around with this and see what happens. I get to plug something into the wall and make some money. Okay, cool. Well, nowadays, it is a publicly traded company where the officials of that company have a fiduciary responsibility to their shareholders to generate profit. So what's happened over time is, in the early stages, the price was able to go to extreme premiums to the cost of production because miners really weren't incentivized to sell. They knew there was something special going on, and they were more interested. Yeah, they sold a little bit to cover their costs and maybe to lock in a little bit of profit, but they held the vast majority of those coins because maybe something special is going to happen here in the long term. But in today's age, when you have publicly traded companies, reporting quarter over quarter, they have to produce a profit, or else they're not benefiting their shareholders. And they have that fiduciary responsibility to always make decisions to benefit their shareholders. So as the price of Bitcoin goes up above the cost of production and creates profit, They actually have a responsibility to lock that profit in. And if they're not going to lock that profit in, they have to lock the profit in to cover costs. But if they don't lock that profit in to cover costs, they have to specifically state through a corporate resolution that they want to have a long-term hodl strategy on Bitcoin, right? They have to disclose to the marketplace that, hey, we're going to make some Bitcoin. We're going to pay a significant cost to get this Bitcoin, but we believe if we hold it instead of sell it now, in the long term, we can get more for this. But that takes a board vote, that takes corporate resolutions. And what happens is you get diminishing returns because not everybody makes that decision. So in the beginning, we got huge movements before the miners were like, oh, okay, I'll lock in my profit here. I'll cover my cost here. And then in the second cycle, we got big moves, but there were some bigger companies that, especially through private equity. And private equity, the same fiduciary responsibilities in private equity as there is in public equity. It's a little bit less tedious, but you still have to produce profit for your investors. And then in the next cycle, we finally got the USA traded public miners, where the fiduciary responsibility creates a lot of downward pressure to lock in profit and push that through as earnings per share on your balance sheet, so that you can attract more investors and issue more debt and things like that. So as that commodity cycle and the participants within that commodity cycle developed, we saw the diminishing returns come. But what we're moving into now is we're moving out of the commodity cycle. I don't believe Bitcoin is going to trade based on its commodity price and based on that cycle, because it's now being monetized. So we're now moving to a money cycle. And the money cycle means that it's linked to credit. Now, this is where something really amazing happens, because you ask me what's going to happen to gold after this happens. Well, this is what's amazing about gold. The natural laws of economics protect the value of gold, because it's the free market incentive of profit that allows people to vote with their money whether the value proposition of that good or service is worth anything, right? So if Bitcoin overtakes gold, it's still going to cost the same amount to produce gold. So the people who are mining gold and pulling it out of the ground and giving it to the marketplace, they're still going to have to ask for a price above the cost. And if the market isn't willing to pay a price above the cost, that is the free market signal telling you, as an entrepreneur, as a miner, hey, reallocate resources. There's no profit to be made here. The amount of demand relative to the supply is telling you that demand is diminishing, supply is increasing, profitability is dropping. You're better off redeploying your resources elsewhere so that you can capture profit, because profit is the invisible hand that drives the marketplace. So the price of gold is going to grow relative to its cost of production. And the premium to the cost could shrink down a little bit, but it's not going to go below the cost, because that would be the market signaling that there's no value here. But we know that there is value, because they use gold in electronics and watches and jewelry and other things like that. So the demand isn't going to be zero. So the cost of production is always going to be a gauge on where that price of gold is going to go. And because that's how much it costs to access the value proposition. Well, the same thing's happening to Bitcoin. We are now moving out of the commodity phase, where you have the price above the cost producing this diminishing return incentive, to now the monetization of Bitcoin. And with the monetization of Bitcoin, what I mean by that is it's financialization. It's complete integration into the system. It's complete acceptance and integration into the world of finance. The recognition of I just seen the Federal Reserve of the United States of America, in one of their documents, came out and said decentralized finance. So these guys are starting to learn that hey, you know what? There is an economy out there that has free market interest rates. Every other country has a central bank that tries to tell you what the price of money is and use socialist price controls on their money. In the internet economy, it's based on the supply of money, the demand for loans, and the perception of counterparty risk. It's a true free market interest rate based on its reserve asset. Well, fixed price controlled markets can never compete with free markets. And that's why Larry Fink of BlackRock is asking for tokenized assets, because he wants to unlock the trapped equity of the assets on his balance sheet and take that liquidity and plug it into the decentralized internet economy. Because when he can provide liquidity in the internet economy, you're going to produce yields that far outpace any type of yields or market making activities you take in traditional finance, where the rates are artificially stated lower. So this true free market momentum and movement of Bitcoin is what shifts it out of the commodity cycle into the money cycle. Now, connecting this back to what happens with gold, this is really amazing. This is an orange pill that I had maybe a year ago. When you have the proper borrowing and lending tools built for Bitcoin, like what we've built at People's Reserve for our fellow Bitcoin maxis and plebs. What happens is when the price goes up, you're not incentivized to sell, because if you're borrowing against your Bitcoin and the price goes up, it deleverages your debt position. So you don't sell because you say, oh, well, there's no reason for me to sell. The value of my debt is now weaker. Matter of fact, if it keeps going up, I think I'm just going to borrow some more. And you do what Michael Saylor is doing. So there, please, someone leave in the comments if there is some type of law of economics that can incentivize supply that isn't price. Because as far as I understand it, price has to go up above cost. Profit then incentivizes producers to increase supply. But since you can't increase the supply of Bitcoin, when the price goes up, you have to increase the price to convince the existing hodlers to let go of that supply into the marketplace. But if those hodlers are smart and are using the proper lending and borrowing tools, increasing the price does not incentivize them to sell. And that's the money cycle. That's the credit cycle. So eventually what you're going to want from the big market makers to be aware of and to make sure you mitigate this risk is they want to drive the price of Bitcoin up really high, offer you really cheap Bitcoin loans, and then let the price collapse, because now they're forcing you to sell it through the liquidation process. You'll get a margin call. You don't have any more Bitcoin to post. They force sell your Bitcoin and they accumulate your Bitcoin. They turn the dollars that they lent into you into the Bitcoin that you posted as collateral. And that's what they want to do. They're there to accumulate Bitcoin. So we have to be really careful of the liquidation risk and make sure you choose your counterparty wisely and choose a counterparty like People's Reserve, who's designing our products to, in some of our products, we completely remove the liquidation risk. Liquidation is only a risk not based on the price movement of Bitcoin, but based on whether you default on the loan or not. So if you're in a position, if you're borrowing against your business's treasury and it produces cash flow and you can make those payments, even if the price of Bitcoin comes down 50%, there is no liquidation risk. You just keep making your payment. Only if you default on the loan can you get liquidated. And this is the future of Bitcoin borrowing and Bitcoin powered finance, because we need to remove that lending risk and make sure that these bigger market makers cannot steal our Bitcoin, steal our pristine collateral in trade for dollars through the liquidation process. But that's the magic that happens. Higher prices can't incentivize you to sell. And it creates a perpetual positive feedback loop, which I believe is going to lead to the repricing of Bitcoin, which is that gold level, 750,000 to a million. After the market understands that it's digital gold, then they'll start to talk about pristine collateral. So what we're talking about here on this call today, we might not see people talk about for another 2-3 years, because the market is just now figuring out, hey, maybe it's digital gold. But by the time we're at 750,000 or a million, they'll finally admit, yeah, it was digital gold. And what's the next narrative? What's the next bull market narrative? Right now, it's the strategic Bitcoin reserve and global adoption. The next bull market narrative is Bitcoin monetization through financialization, making Bitcoin evolve from digital gold to pristine collateral. So by listening to this show, you're ahead of the curve and you know what's coming. Strengthen your thesis and keep stacking sats.
After all, we've seen it already with BlockFi and other companies wanting to give you some sort of a yield on, oh, let me borrow your Bitcoin, which you lose custody, you should never do. And in return, I'm going to offer you 10 or 20%, where in fact, Bitcoin is doing 50% on average a year. So why would I gamble my entire stack for an additional 10% out of my mind? But whatever, you do you.
Well, that's the confusion. Never lend your Bitcoin. You borrow against it. Yield is actually earned through Bitcoin through the deleveraging of your debt. So as you post Bitcoin as collateral and you borrow a little bit against it, over time, that 60% CAGR is going to reduce the burden of your debt significantly. And that's how you yield. You can pull forward purchasing power today to buy what you want now at a lower price, so that you don't have to buy it later at a higher price. And the difference between the lower price and the higher price is actually the yield that you get paid. But it comes in the form of borrowing against your Bitcoin and using it as pristine collateral. Never by lending out your Bitcoin to earn an interest. And unfortunately, I think with the bigger banks getting into the picture, they're going to try to incentivize people to deposit Bitcoin. And of course, it's fractional reserve. So there's going to be paper Bitcoin. And then on top of that, they're going to rehypothecate. So you're going to deposit your Bitcoin and multiple people are going to have claims to that Bitcoin. That Bitcoin is not kept in multi-sig and segregated from the balance sheet of the company, and have it on chain where you know that, hey, that's your pristine collateral. It's not being rehypothecated. It's not being moved around. It's waiting for you for when you pay off this debt. So that's what, comes back to picking your counterparty wisely and going with Bitcoin maxis who built solutions for other Bitcoin maxis who understand these problems and these risks within the current lending space, so that we can upgrade this space and accelerate that monetization and financialization of this beautiful engineered money that the world has never seen before.
Speaking of which, I mean, what you guys are building on People Reserve?
We've actually shared a couple of products so far. We've been building stealth for 3 years. So you can imagine we started this company in the middle of the war for crypto, and the decision of the board was, hey, look, do we want to start talking about this stuff and put a target on our back? We could become our own worst enemy. How about we just pump the brakes, build in stealth, and then when the time is right, we can come out and start talking about these things. So thankfully, the country woke up and was able to, I guess they call it too big to rig, right? Enough people showed up where they couldn't steal it. And now we're seeing the changes be implemented that we voted for, which is really exciting. But the war on crypto has ended, and what were a bunch of headwinds are now a bunch of tailwinds. What we had to preemptively pay our lawyers to defend us from 2 and 3 years ago, we no longer have to pay those costs. So now those costs can be issued somewhere else, and we can be more efficient. These are the things that people who don't start a business don't really understand that much. There's a lot of costs. And when you have to fight a war, those costs take away from what you can innovate and what you can build. And now, thankfully, we're able to focus on what we're building. And the products we have talked about thus far are the self-repaying mortgage, the Bitcoin-powered mortgage, the home equity Bitcoin line of credit, and the Bitcoin bonds. So these are all products that are never offered anywhere else in the world. We are first market movers. We are innovators of revolutionary new debt equity products that the marketplace has never had access to before. And I think what's so exciting about them is it's multiple solutions for multiple people. So when it comes to home ownership, for people who saw me on Natalie's podcast, thus far, my research and development into the self-repaying mortgage cost is $9 million. And when Bitcoin goes to 200,000, it'll be 18 million, and so on and so on. So, I like to say I'm alive on the outside, but I'm dead on the inside. I had to learn the lesson of why you don't sell your Bitcoin to buy your house. But learning that lesson led to the creation of this product so that other people don't have to learn that lesson the hard way. And what we do is we enable you to get access to credit, regardless of your credit score, because it's based on Bitcoin collateral, to buy a home. And the second thing is that it's what's really important to understand is the liquidation risk, right? So the only way you get liquidated in this case with this product is that you default on the mortgage. So you're not borrowing directly against your Bitcoin. We are not rehypothecating your Bitcoin. It's held in multi-sig. It's segregated from our balance sheet. It's protected for you. That's a common sense Bitcoin maxi setup. But it's also an extra component to the contract. So there's still going to be a lien on your property. So if you default and the value of the Bitcoin isn't enough, unfortunately, we'd have to foreclose on you. Now, if it's over collateralized and you default, we'll just sell the Bitcoin and give you a phone call and say, hey, congratulations, you own your home. And that's the situation we want to be in, because it reduces sometimes it could take up 18 months to foreclose on a property, and there's significant lawyer costs to that. And that cuts into profitability and everything else. So all of that plays a big role in lowering the risk of the lender. And when you can lower the risk of the lender, you can get a lower interest rate. And when you take Bitcoin and you allow it to do it 60% CAGR, and now maybe you want to buy $1 million house, you put $200,000 down, you borrow $800,000, you post $1 million of Bitcoin collateral. Bitcoin goes to 200,000. It's now worth $2 million of Bitcoin collateral. You have a few options. The first option is that you can withdraw half of your Bitcoin and take that back into self-custody so that's not held in multi-sig, because all you have to do is maintain the contractual LTV threshold of the value of your Bitcoin relative to your debt position. And then the other thing you can do is you could sell maybe 0 to 100% of your Bitcoin if you're not good at timing the markets and you want to start using your cash flows from your work more aggressively to increase your quality of life and standard of living. Then you can 0 to 100% your monthly mortgage payment. So if your monthly mortgage payment is $3,000, well, you can sell $3,000 of Bitcoin per month and slowly take from that 60% compounding annual growth rate to increase your quality of life and standard of living, freeing up your cash flows to be respent. Finally, you can completely liquidate the Bitcoin and pay off the debt, depending on how much money you borrowed, saving hundreds of thousands of dollars in interest over the life of the loan. Now, those are the options that we give you. On the downside, if Bitcoin goes down and you put maybe Bitcoin goes down 50% and you had $1 million of collateral, now you only have $500,000 collateral. Well, your interest rate's going to go back up because now us as the lender, we're taking more risk. So there's no liquidation risk unless you default. We're not going to take your Bitcoin from you, but we are going to have to adjust your interest rate in order to make up for the additional risk of now the loan being under collateralized. So that's our self-repaying mortgage product. We couldn't be more excited to bring it to the market. We're going to be live by the end of Q2. And we're getting tons of demand. You guys can go to peoplesreserve.com and register for our newsletter. You can get in touch with us there and we'll do the best to answer your questions. But a lot of people are excited about the opportunity. And it's not just Bitcoiners, because we also have the Bitcoin powered mortgage and we have the home equity Bitcoin line of credit. So a lot of people, what if you already have a house? What if you have a pretty decent interest rate and you've had your house for 5, 10, 15 years? But most mortgages in the United States are fixed 30 years. So you'd still have a long time to pay off, but maybe you bought your house for $250,000 and now it's worth $500,000. So you have $250,000 of equity that is trapped in your home. There's nothing you can do with it. You can borrow against it, but now you got to go pay the bank a liability. Now you have to make more cash flow because now you have to pay a mortgage on that, a second mortgage on your HELOC, as well as the first mortgage. So you're taking away from your cash flow, you're reducing quality of life and standard of living. And the home equity, depending on where you live and what zip code you're in, is going up anywhere between 2 and 8%. So you're only getting 2 to 8% of that growth in your home equity. Meanwhile, you have Bitcoin, engineered money, the best performing asset in the world, on the brink of monetization through financialization, with a 60% compounding annual growth rate. Well, you know what? Janet Yellen, I only have one quote from her that I ever liked, and it was, home equity is the most important source of wealth for all Americans except those at the very top. So for the vast majority of people in this country, in the United States of America and elsewhere around the world, the most valuable source of wealth to them is actually their home equity. Well, the HEBlock, the home equity Bitcoin line of credit, is designed to empower you by enabling you to transform your home equity into Bitcoin equity, to get out of the 2 to 8% CAGR and into the 60% CAGR. And when you do that, what happens is it's not like a home equity line of credit where you get that money and you can do whatever you want to do with it. No, you borrow that money. We purchase the Bitcoin for you. The Bitcoin gets held in the contract as collateral. And then you get the same loan to value ratio thresholds on your interest rate you would in the self-repaying mortgage. So every product has been designed to empower the person because we're building for a Bitcoin standard. If your financial products and services don't deliver value, you won't exist in a Bitcoin future. So People's Reserve is beyond the fiat maximalist yield generation schemes. And we want to deliver value because value is how you build lifelong customer relationships, and lifelong customer relationships are how you build real businesses. So that's our focus. And finally, for people who don't own any Bitcoin or any home at all, we have the Bitcoin powered mortgage, where you're going to come and get a loan from us based on your credit score and based on your balance sheet and based on maybe something else you can post as collateral. Maybe you can post gold as collateral. Maybe you can post silver as collateral. Maybe you have an investment property. You rent, but you have an investment property. Who knows? It's different in every situation. But you want a home, you want a domicile, and you know you need Bitcoin. And the Bitcoin powered mortgage, if you're going to buy that $500,000 home, we'll lend you $650,000. And you take the $150,000, it goes into Bitcoin, it gets held as collateral within the contract. And then over time, you're empowered by that Bitcoin position because the 60% CAGR outgrows the burden of your debt, which is going to be lower than anywhere else you're going to get it because Bitcoin is integrated into the contract, lowering the risk of the lender, giving you the best interest rate possible. We couldn't be more excited to start this marketplace. And we truly believe there's going to be a lot of options out there when people see the power of Bitcoin being integrated into traditional credit and debt products and how it relates to real estate. So our real estate line of debt products that hybridize traditional credit with Bitcoin equity are set to transform financial markets.
I love it. And guys, of course, in the description, you will find CJ links and, of course, People's Reserve detail in case you want to know more. But CJ, man, it's been an absolute pleasure having you on the show. Thank you so much for coming in today.
Yes, thanks for putting up with my long-winded rants. It was very enjoyable. I look forward to maybe doing it again after we go live.
For sure. I'd love to have you again on the show. So thanks again. And guys, thank you so much for watching, and we'll see you on the next one.